If you're considering moving to another state that is more tax friendly than the state that you currently live in, we will often get the question, hey Mike, should I wait to sell investments at a gain until after I change my domicile to another state? Or with investment property, should I wait to sell that investment property until the domicile change to my more tax friendly state has been completed? The answer, unfortunately, is it depends. It depends on what type of assets you're selling, whether it's real estate or just plain old investments like stocks and bonds. It depends on when you actually sell it, the timing of it. And also the third, which is another big item, is have you checked all the boxes to successfully change your state of domicile to the more tax-friendly state? We will be covering all those topics and more today. My name is Michael Ruger. I'm the managing partner of Greenbush Financial Group. We do all this type of tax planning and financial planning for clients all the time that are changing states, whether they're getting close to retirement or they're just changing states for a new career and they have to make some of these tax decisions. So the first asset we're going to start by covering is rental property or investment property. If someone owns a rental property in New York and they've owned it for many years and there's a big unrealized gain built up into that property and they're considering moving to Florida within the next few years, which is a much more tax favorable state, the question comes up, should I just wait to sell that property until I've officially domiciled in Florida because it may allow me to avoid paying state tax in New York on that gain? Or doesn't it matter whether I'm in New York, whether I'm in Florida, do I have to pay tax on that rental property either way? Unfortunately, it's the latter of the two. When you own real estate or real property like land within a state, that state will typically tax the gain on that property or real estate, regardless of the state of domicile of the owner. So someone can go ahead and move to Florida and establish domicile down there, but if they were to sell that New York property after moving to Florida, New York is still going to tax the gain on that property. Then the question comes up, is there any way to recapture the tax that you paid in New York? Since technically you're not domiciled in New York, you're domiciled in Florida. The answer, unfortunately, is no. The way it works is if you pay state tax to a state that you're not domiciled in, you then typically have a credit for those state taxes paid that would then offset state taxes due in your state of domicile. But the problem with that is Florida doesn't have any state tax, so there's nothing to use to offset, so that state tax credit essentially just goes unused. Now we're going to shift gears over to selling a primary residence as opposed to an investment property. So if you're looking to sell your primary residence and you're looking to move to another state, does it make sense whether or not you sell that before you leave the state or before you domicile the new state? Same rules as the real estate we just covered. It really doesn't matter because the property is located in your current state. However, when you sell a primary residence, you have that very large gain exclusion. So if you are a single filer, you can exclude $250,000 worth of gain. If you're married filing joint, you can exclude up to $500,000 worth of gain when you sell that property. For example, if you bought your house for $300,000 a number of years ago and you sell it for $700,000, that means your gain in the house was $400,000. As long as you're married filing joint, you are fully covered by that $500,000 gain exclusion and you don't have to pay any tax at the fed or state level. However, if let's say someone that married filing joint, they bought it for $300,000, they sold it for $1 million, the $500,000 exclusion covers them up to basically that $800,000 marker, but then they still have $200,000 worth of gain over and above their $500,000 annual gain exclusion. They would have to end up paying tax at the federal government, at the Fed level, and then probably to New York State, even though they might have already changed their state of domicile to Florida. Now we're going to cover how selling investments work when you're changing your state of domicile. So this would be selling stocks, bonds, ETFs, things that are appreciated in value. This has much more tax-friendly rules than the real estate side, because when you sell an investment, let's say you bought an Apple forever ago at $10,000 and now it's worth $100,000. You have a $90,000 gain. If you live in New York and you sell that, you might have to pay long-term cap gains to the federal government, but you're also going to have to pay tax at the state level to New York State and then that $90,000 gain. However, if your plan is to domicile in Florida, which is a state that does not have any state income tax, if you officially domicile in Florida and you wait to sell that security until after the domicile change has taken place, you still owe tax to the federal government, but you avoid having to pay the state tax on that gain in your Apple stock. This can potentially result in a substantial tax savings depending on the size of that unrealized gains that is eventually unrealized. Because if you have someone that has an unrealized gain in a stock of, let's say, 190,000 and they're currently domiciled in New York, they would have to pay roughly about 6% state tax, which would be about $11,400. If they domiciled in Florida and then realize that $190,000 gain, they essentially wipe out that $11,400 tax liability. For individuals that change their domicile mid-year, there's a rule called a line in the sand rule. So what they do is they draw a line in the sand on the date you change domicile. So if someone changes domicile from New York to Florida on May 15th, they draw a line and they say, hey, all the investment activity, dividends, interest, capital gains from January 1st to May 14th, taxed in New York, everything May 15th forward for that year would be taxed or essentially not taxed at the Florida state level. The next natural question we'll get is on IRA distributions. Now, while IRA distributions are not taxed at capital gains rates, it's ordinary income for pre-tax IRAs, that same line in the sand rule applies. Any IRA distributions that take place prior to the change in domicile are taxed in the current state, where as soon as you draw that line saying, hey, I'm domiciled May 15th after, are going to be taxed at the new state rate. So there's a tax strategy here. If someone has to take a requirement of distribution, an RMD, they might wait to take that RMD until after they've changed their state of domicile to the more tax-friendly state. Or if someone's doing Roth conversions, they might decide, well, I'm going to wait to do my Roth conversions until my state of domicile change is complete so I don't owe state tax on the conversion amount. We spend a lot of time with our clients and their accountants to successfully map out all the steps that need to be completed to successfully change their state of domicile. Now, while people think it's, oh, I just got to spend 6 months or more in that state, it actually isn't that easy. There's facts and circumstances, like things like you have to change your driver's license in that state, you're registered to vote in that state, most of your doctors are in that state, because these states do audit to make sure that you've officially changed your true state of domicile, not just satisfying that whole 6-month requirement. And when states audit people for this, they'll go as far as checking cell phone records, checking credit card statements to say, where were you spending your money? Because if you told me via your self-log you were down in Florida 6 months, but I can see credit card transactions in New York for 8 months out of the year, they might press you on that audit. Because there are so many rules associated with changing your state of domicile, we created a separate video on that topic as a standalone all by itself. We'll put a link in the description of this video below. I hope all this information was helpful. If you have any questions, please feel free to reach out to me at greenbushfinancial.com. Thank you.